Hello everybody, I hope that you're doing very well and welcome to this evening's Contenders live stream where I am planning to cover divergences, so I hope that you're all looking forward to this one. I'm really aware, by the way, that Bitcoin is very volatile at the moment, but I do want to stay focused on what I want to cover tonight, basically, instead of like going into live trading halfway through. I just want to stay focused on giving the lesson today on divergences. So just so you're aware before we begin, because undoubtedly people want to know straight away. So I am in a short right now on Bitcoin. Obviously right now I've just set a hard stop loss. If I get stopped out with another move up, that's that's fair enough. But yeah, I am in a short right now on Bitcoin. So yeah, we'll have to just see how that goes, I guess. I want to cover though Bitcoin at the end of the stream, and if we do get some extreme volatility that goes on through this stream, I myself am going to stay focused on the content that I want to deliver to you all tonight. But yeah, absolutely fair enough if you need to pause the video or take a break and go trade Bitcoin and just watch this back later. That's understandable as well. But myself, I'm in my positions, I've got stop losses set, and if there is a move up during this stream, I'm going to continue with the content basically, and I'll just trade it a little bit later. For me, that's just how I'm viewing it right now. So yeah, just wanted to make you aware of that, how I'm trading Bitcoin. Yeah, obviously it's very volatile right now, but yeah. Starting with Litecoin chart of the week, and then mainly what I want to go over. And by the way, this is hitting, well, it hit about an hour ago on that Bitcoin rise, which was very nice, that Bitcoin rise, by the way. But what we can see is Litecoin pretty much a live one, and then moving on to what I want to cover today, which is divergences. Okay, divergences obviously in trading, I guess, but yeah, divergences. And I primarily wanted to do this one because of the amount of charts that are posted in the group, with people referring to divergences, but in my opinion an incorrect way of using divergences. So I wasn't planning to do this one in this order. But because of the amount of sort of incorrect uses of divergences, I felt it was worthwhile moving divergences forward, basically, because yeah, you can lose a lot of money if you incorrectly trade divergences. So I hope today, by the end of this, it will have cleared it up of how I myself am looking to, always trade divergences, and I'm not trying to say I'm an expert, but hopefully you can take some, knowledge of how I trade it, which is hopefully quite well, I guess. So yeah, that's what tonight's all about. So I hope that you thoroughly enjoy. So Litecoin chart of the week. This was. Well, obviously, firstly, we were inside of a parallel channel. Parallel channel broke up, and we were then forming a new channel outside of this channel where we had a clear line of resistance, and then the support being more or less the top of the old channel. Okay, my entry was for a pullback down to this level, which was specifically below these stops. Okay, so kind of a liquidity grab, basically looking forward to long that pullback back up to the 618 resistance, back up to the weekly level. Okay, so you can actually see this literally hit about a few hours ago during the Bitcoin rise. So let's just zoom in a second and show you exactly how this is going. Well, actually, stay on the bigger picture first. Actually, but after last week, I should probably make sure you can all hear me. Yeah, I've been steamrolled so many times by shorting divergences. Yeah, I'm not surprised because so many people lose money shorting divergences. So tonight's going to be a good one, I'm sure, for you. But yeah, so let's start off with Litecoin, because what we can see here, I've got this really clear level of which is old support, resistance, support, resistance, and then naturally over the last few days we've seen this being still resistance, and resistance again. Okay, so that really clear level of resistance. What do we have before that? We had this, or how I was trading it, this sideways parallel channel. Okay, as you all know, what was really nice about this one was just before the move up to that old resistance, okay, before we come back up to this, we did pull back to the bottom of this channel. Okay, we can just see it was a nice midpoint and top and bottom. Okay, so we come out, we break above that channel, come back very close to the midpoint, back up to resistance, and in the end I was looking to get in around these lower wicks, as you can see here, just if I highlight this very well. Okay, entry or below this sort of wick and this wicked region, e.g. anybody that's long here looking to basically fill a position on a drop down to essentially try and get that back up. Position right now is literally at break even. If we zoom in here, what we can see is basically our entry. There was a little bit of a reaction. My first take profit was set at a 618. You can see it got very close, but this for me is, I did not take profit here, which is a little bit annoying, just because this drop happened, and I was yeah, just trading Bitcoin. But yeah, I missed my take profit, setting the take profit, which was slightly annoying because it literally I would have front run it always, and so I missed my take profit. So I'm still in the position here. Missed take profit one, but that literally would have been my take profit one, that 618 retracement, because you have to think the target, okay, is weekly, which is a 4% rise. Okay, so the target is a 4% rise. Okay, target's 4% rise. This in itself is a 1% rise, so that equals, e.g., 25% of my overall target. So I would have liked to lock in a percentage here, but I actually missed it, which is a little bit annoying, but I'm not going to beat myself up about this one. So yeah, that's basically how I'm looking to trade, or well, basically still am trading Litecoin. As you can see, it's literally pretty much at entry right now. So yeah, I guess this might probably either stop me out or head up by the time we get to the end of this stream. But that was basically the setup on Litecoin. It's not really that hard. Okay, so it's quite a simple one, really. Looking to trade the pullback, okay, into an old SR level. On top of that, a liquidity grab. Okay, so what's the number one thing that you'd want to see, really? If I could have had a dream scenario, it would have been literally a wick down, straight back up. Okay, but what we've actually seen is a move down and now closing below this level. So that, in my opinion, is not actually a bullish scenario anymore. So I might get stopped, to be honest. This wouldn't have been my number one preferred scenario when entering these orders, if I'm honest. I would have wanted to see the that sort of V-shaped recovery rather than coming down here and now consolidating here, which is obviously below that resistance. So yeah, might possibly get stopped out of this one. But sometimes this is like what I've said many times, that some of my trades which I've thought, oh, I'm going to get stopped on this one, actually turn into some of the nicest winners. So when there's that sort of unease, trades can actually turn out really well, I think. So yeah, I'm staying in this long basically, and yeah, we'll probably see some resolution by the end of this live stream, whether this stopped me out or come up basically to target, which is by the way this weekly. And I'd just like to show you, I will put on this weekly and just delete it a second and show you everybody exactly how this is drawn. Okay, so okay, I just deleted the wrong one, but you can see the point. I was really confused then. So we have two weeklies on this chart. I'll delete them both and just show you exactly how this is done. So what am I looking at? Okay, so this was the highest candle closes before the drop down, e.g. that gives us our weekly level. So these are the two closes, yeah, before a drop. Okay, so that's what I mark as a weekly level. And similarly to up here, okay, this is obviously during the downtrend, but these were the highest green closes, okay, with the red close prior to that drop down. Okay, so again, I would mark this as a weekly level because that is our highest candle closes before the drop, highest candle closes before the drop. E.g., I'm not taking weekly, I know this is a little bit off topic, but I'm not taking any weekly level here because it's just moved down, moved down, moved down consecutively, okay? So I see the last green close before the drop, e.g. again, last green close before a drop, and you would have a weekly level obviously here as well. For an example, this would be your last green candle before that heavy drop down, where you got two candles next to each other. This is not a weekly, 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 this is our weekly. Okay, you've seen, proof is in the pudding that these levels are absolutely amazing. So yeah, that's how I do them. There's the saying that I can't remember the exact saying, but it's something like I really can't remember the saying, but it's something like easy to grasp, but yeah, that's it. I think easy to grasp but hard to master. E.g., these levels are not hard. I would say that this is quite easy in terms of once you've worked out the theory, it's quite easy. Like, we're just looking at our last closes before a drop, or last, this would be our weekly support, for example. But yeah, some people just find it very hard to actually master trading from them after they've put in the levels. But yeah, for me, I absolutely love these levels. They are a real core part of my trading. And yeah, I think you can all see why, because they really, really are powerful. But anyway, so yeah, that's Litecoin. Do you trade LTC or MEX? Yeah, so this was another question that I wanted to cover. I'll cover this at the end, but yeah, I do trade Litecoin on BitMEX, by the way, and obviously the charts are different, but it's really strange that I base my trades off of Binance's chart. It's a kind of like a weird thing to kind of explain, but I look for all of my technical analysis off of Binance's chart. Okay, so I will take all my setups from the Binance chart, although I trade Litecoin itself on BitMEX. I actually take all my setups off of the Binance chart, and that's kind of with basically the reason being that this obviously has no data. It's very, very hard to get levels off of this chart. Okay, it's just there's no data because you're trading futures contracts and the futures contracts expire and then you're out of time. Like you come up to the weekly here, it's like how can I begin to, you just don't have that history, so it makes it a little bit hard. And also yeah, I just love trading it off of the Binance view. Obviously you can see like the similarities here. The charts are very similar, but your levels are going to be slightly different. That's obviously the wick coming in on the BitMEX chart. Okay, obviously they're not picture perfect, but you can see more or less that's the lower wick I'm referring to of the buy of on Binance, and there it is on BitMEX. So the charts are similar-ish. Obviously there's a little bit of difference, as you can see here. This was not high taken out before the drop. This here we did have a high before the drop, so there's little bits of differences. And yeah, I mean, I don't really like trading like this. I prefer to trade off of the chart that I'm actually trading. Absolutely, I would, but it's just because of the lack of history. And if you go over to Binance, these alts are just don't move sometimes. So I find it much more fluid to trade looking at the Binance charts, if that makes sense. I will take some questions before I move on to the start of divergences. You can all hear me. That's brilliant. I'm very glad that this week I've done it good. Hey Dan, why didn't you mark the last weekly from the bottom? So really good question on this chart. So why didn't I mark the last weekly from the bottom? Okay, so this, as I said here, this would be a weekly level. Okay, that for me would be a weekly. Why have I not taken this weekly? Because it's on the monthly level. Okay, so when I see a level that's so close to a monthly, I take the higher term time frame. Okay, and if we zoom out to the monthly, there's your monthly level. Okay, the weekly being so close to the monthly, I would just leave the higher term time frame chart or level on. Okay, so I don't want to cluster my chart by having so many levels so close to each other. For me, that's just too much information overflow. Okay, I want to keep it nice and clean. So if I got levels close to each other, I'll take the higher time frame candle because it's for me more relevant. So really good question on that. Do you ever use zones instead of levels? Well, although I don't mark this as a zone, I would say although this is exactly 6701, I am looking at it as I'd front run or it's not as if it's a line, although you're going to see it lots of times where it's respected totally to the tick. The majority of the time you are going to see little moves through it, okay, or back down below. It is in itself a zone. Okay, so I would say this is like a monthly zone, so to speak. Although many times you do see it hit exactly and come off, but you have to really refer to it as a zone because really technical analysis isn't perfect per se. You do have to envision each of these levels as a little bit of a zone. So here, for example, you're coming through, coming back up. These levels should be viewed as zones rather than like perfection. Let me just see Bitcoin a second. Oh, so Bitcoin is looking pretty decent still, by the way. So I'd take a little bit of caution. Anyway, coming back to Litecoin. Yeah, Bitcoin's looking pretty decent. But yeah, I would view that as a zone. That last weekly level up, I mean the one that has a long red candle before two green candles. Oh, I'm really confused what you mean. I mean that one that has a long red candle before two green candles. Ah, you mean like here? So yeah, this could be added to your chart, but so this is an old weekly, what we'd refer to an old weekly. But then because we've traded up through it and back down below, I generally won't have that on my chart unless it looks like it's still being respected. So if you come down here, well, one could argue it is still being respected, but you see here, this is probably why I haven't got it marked, that this is the middle of the parallel channel. So I don't need to have this clutter on my chart either because I've got it marked out by the middle of the parallel channel. But that's an old weekly, which is now the middle of the parallel. So yeah, generally these old levels, unless I still seem respected, if they've been gone up through and back down below, I'd say it's like a washed level most likely, and it's not too relevant anymore. So I like to focus on the right hand side of the chart before I go to the left hand side. Okay, so does that make sense? So I'd focus on my levels to the right working to the left, because more relevant price data is to the right of the chart, what's happening now, than what happened in the history. Isn't LTC a bad coin to trade? I mean, there's always a lot of crazy wicks. No, I disagree with that. I think Litecoin is a good. I personally like trading Litecoin, so I disagree with that. Please don't forget to go over price action, volume, and momentum. Yes, I've got like a slide for this at the end of the at the end. I've got a slide for that one. BTC decent to short or long? BC. Oh, well, I'm in a short, so I'm in a short. I will just take this last question, then I'm going to begin on divergences. So I'm in a short on Bitcoin, but all I'm saying is this is obviously just making higher, well, basically higher high, higher low, higher high, potentially higher low, and just going to continue up. So I'm aware that I'm probably going to get stopped out of this position, this short position, because this at the moment is looking pretty, well, decent in the fact that it's just making higher highs and higher lows. So yeah, I probably will get stopped out, but never mind. So yeah, moving on to what I want to cover today, which is divergences. Okay, so yeah, many of you obviously I'm sure everybody here has all heard of the term divergences and have a rough idea of what they are. Hopefully today I can give you some extra information about specifically what divergences are. Okay, so I'm going to start off just the stream site by just, for if you don't know or you just would like a little bit of clarification, I'm going to start off by just explaining exactly what they are. So your standard divergences and then your hidden divergences. Some people get very confused, even in the champions group, between the two. So I think it's good to clarify the meanings. And then I'm going to go over why I personally do not pay too much attention to divergences, and then ending with how people lose money trading divergences, essentially. So yeah, just some notes before I begin, that I would never, and this is literally never, ever, ever, trade from divergences alone. Okay, so if I load up a chart, the last thing I would ever look at is divergences, or any indicator period, really. I am like a trader. Obviously, everybody goes through the stages, I think, like, I think newer traders, when they first come on to trading, would love to have like 10 indicators on their screen. They're going to have all the, I can't even think off my head. They're going to load up their screen. They're going to load up the Ikamochu cloud. They're going to load up your exponential moving averages. They're going to load up the candlestick pattern indicators. They're going to load up these, Bill Williams indicators, the awesome oscillators, the RSI, the MACDs, the OBV, and they're going to just have 100 indicators. Obviously that's an exaggeration, but 10 indicators on their chart, and they will think that they have an advantage by having all these indicators. I actually much prefer what's referred to like naked chart trading, where I could trade if I wanted to with 0 indicators. Okay, so the RSI and the MACD, all those indicators, they're all something that I would refer to last. Basically, I would never ever base a trade off of divergences alone, and if I do, I do check divergences, but it's always the last thing I go to. So if I'm looking for a bearish stance, okay, and then I see bearish divergences, well, that's just adding confluence to what I already thought anyway. So yeah, I just wanted to really make that totally clear, that indicators are actually you want to try and get away from them, in my opinion. And the way, if you're here to learn from me, then I would say you want to try and lean yourself off of indicators. Okay, you have to think. Okay, indicators are really what retail are so obsessed with. They're all obsessed with getting the best indicator. And does it surprise you that 95% of retail lose money when they're so focused on these indicators? I mean, that's a rhetorical question for you to think about. But just think about it, I guess. So after a sideways period, okay, this is when we see the biggest loss of money, in my opinion, from indicators such as the RSI. Okay, so after a sideways period, so let's just imagine going back to, let's go back to the start of 2019, okay, where Bitcoin was obviously hovering around 4,000 for, well, 3,000 to 4,000 for a few months. Okay, from what was it, December to about April time we broke up. Okay, and obviously Bitcoin is moving sideways. Bitcoin moves sideways, and then it suddenly pumps. Okay, it breaks through the what was then an ascending triangle resistance. We broke through that resistance, and the RSI obviously goes straight to oversold, because you've went from a period of sideways, and then suddenly you break out with a massive jump of momentum, and your RSI indicator is going to go straight to, let's just say, 95. Okay, and so that's what most people are going to say is overbought. Okay, so you'll come up to 95, which is an overbought reading. You'll get a little move down, okay, and then your secondary move up again from that is, it's obvious that you're going to get bearish divergences. I just want to say this because it's obvious without loading up the RSI that the momentum after an extreme move to the upside, once you've got that little retracement and you get your secondary move up, the momentum is never normally going to be obviously as big, because you've suddenly, let's say like on Bitcoin, you went from 4,000 straight up to the mid 5,000s, okay, that secondary move up is not going to be in the same amount of momentum. So you would know without even looking at an indicator that your secondary move up is going to be on less momentum. That's obviously bearish divergences. That's where retail are going to be like, okay, bearish divergences, it's time to short, okay? But then the way I view this is, you know, without even looking at an indicator, or you should know, I guess with time, that these moves are always going to be... I'll load up the chart in a minute, by the way. I will load up our charts and show you examples. But I just want to explain this before I actually get into the examples, that you just have to think that these secondary moves up are always going to be on lower momentum, because you went from a sideways period, massive move to the upside, little drop. That secondary move up is always going to show bearish divergences, because the momentum on the secondary move up is not going to be as strong as the first 1.5 grand pump out of nowhere, essentially, is it? So, you know, a lot of people are going to get caught out by essentially seeing a trend that I would view as changed into a bullish trend, you know, a strong move up. Then you got lots of people trying to short these moves just because of bearish divergences as their main sort of factor. But yeah, I will load up the examples in a minute to make this. I hope that I've explained that well enough there, but I will load up more examples. But yeah, basically the following moves always have, you know, a bearish like bullish divergences, as the following wave will have less momentum. This does not mean short. So using Bitcoin for an example, that kept moving up and moving up during 2019, and there were so many people shorting every move, literally from literally, this is like, there were people shorting that from 5k all the way up to 10k, say, because every move, you know, they just thought it was turning down. There was bearish divergences on the moves up, and you know, you just have to trade with the trend. Basically, if that trend has changed bullish, then you don't want to keep trying to jump in front of it, in my opinion. But and then just one final point before we begin, that tonight's stream is about divergences in general, okay? So these are seen across indicators such as the MACD, RSI, stochastics, OBV, etc. So your momentum sort of indicators. And tonight I am going to be just explaining divergences in general. So as I say, divergences, for instance, hidden bullish divergences, you can see this on other indicators other than the RSI. It's just that's what I'm using for the example tonight. And tonight's live stream as well is not to tell you how to use RSI, or specifically the mathematics behind RSI or anything like that. It's literally divergences in general. Okay, so tonight's live stream is not focused on RSI per se. It's just focused on the divergences that you get from these indicators, and I'm just so happen to use RSI as the example, if that makes sense. Okay. Really, three comments before I begin. First one is, sounds like me 2 years ago. Yeah, I'm not surprised. Like that's typical newer trader. They want to load up all the indicators because they think it will give them advantage. You know, I done that when I first started trading, so like I'm speaking from experience as well, so I totally understand that. Would you say this theory applies to all markets in regards to indicators? Absolutely, I would. I trade the same across all markets the same way, so in my opinion, yes. And last comment is all Fibonacci. Yes, Fibonacci is pretty good. So yeah, let's begin. Firstly, just explaining for the people that don't know what exactly divergences are. Okay, so these concepts are not difficult. Okay, so firstly, bullish divergences. Okay, so you're aware, again, this is not specifically on RSI, but just across all your oscillators. And so I put oscillator here. So basically your bullish divergence, and this is a reversal. Okay, so your hidden divergences are for continuations. Okay, and your bullish divergence, I will write it here, are only for reversals. Okay, so there's a real strong this is another mistake I see people making just on divergences in general. They'll say like, oh, here we've got some hidden bullish divergences, while looking for a reversal in the trend, a reversal of hidden bullish divergences. That isn't how it works, okay? If you do use divergences, you have to use them correctly, because otherwise you're even going to set yourself back even further. So bullish divergences would be after an extended downtrend. If you get an extended downtrend and then you start to come onto an important support level with bullish divergences, well, that's your sign you could see the trend reverse. Okay, so that is good. So as I've said here, so firstly, what you're looking for is the price to make a lower low. So your price is making a lower low in price. So let's say the price of Bitcoin went from 5,000 to 4,500. That's a lower amount in price, but the oscillator went from say 30 to 40, so the oscillator is going up but the price is going down. That's standard bullish divergences, and it's a signal of after a downtrend you could reverse to the upside. Okay, so when one sees bullish divergences on a chart after an extended downtrend and coming into an important support level, it is a sign the selling pressure is lessening and there may be a reversal in the current downtrend. Okay, put maybe here because, as you all know, trading is all about probabilities. There's never a guarantee in trading. Okay, never ever a guarantee. You could see every technical indicator coming together, and at the end of the day it's still probabilities. There's never 100% guarantee, so e.g. use risk management. But generally, if you see, if I see an extended downtrend and prices coming to, let's say, a monthly level, we've got bullish divergences, we've got a Fibonacci extension, you've got some sort of let's say like a thinking, oh my god, my mind gan, if you're seeing some factors come together, then this is going to be your confluence essentially. Okay, and that's when you can get confidence that the trend is reversing. Okay, but I would only look to trade these bullish divergences if the trend is down and we're looking for a reversal and that it comes in line with another technical tool. Okay, I would never use it on its own. Okay, so this is an example, by the way. So here we see on Bitcoin, and this was so these are all examples that were literally over the past 24 hours. So here we saw on Bitcoin, okay, coming down in price. So here we see price making lower low, lower low, lower low. There was a hourly level on this point. Okay, there was the hourly level, but obviously this was the time where we were just hitting 618, 618, 618 and coming down. But nevertheless, there were bullish divergences there to be seen, where you see the lower low, lower low, lower low, and you can see here on the oscillator, which in this example just happens to be the RSI, we see higher low, higher low, higher low, higher low. Okay, so that's your bullish divergences, and that's safe to say when we just load up this Bitcoin chart. Okay, so that was here. Okay, that's very safe to say this was an extended downtrend. Okay, so this was a period of a total of around 6 days. Okay, coming down, coming down, coming down, and then you start forming your bullish divergences here. And if I just load it up to show you, might as well. Okay, you can see here when we zoom in really closely. Okay, that is the end of the downtrend. Okay, coming to the end of the downtrend, and you start to see your lower low, lower lows, and higher lows, higher lows, higher lows. So that's your bullish divergences. And unfortunately, I deleted like all my levels off of this chart earlier. This was actually a trading view glitch. I did not want to delete all my levels and everything, by the way, but just there we go. So like the confluence, because I would never trade off this alone. But the confluence that you could have like seen if you were on the ball here was that you were coming down onto this hourly level, lots of sort of wicks, and you see the bullish divergences here exactly. So the lower lows on price, and obviously higher lows on the RSI. So low, lower low, lower low, higher low, higher low, higher low. So there's your bullish divergences coming onto a hourly level in this instance after a extended downtrend. Okay, so that was the example there. Moving on. So this is obviously the same again, but bearish divergences. So just flip it essentially. Okay. So the bearish divergences are where price is making, flip it basically, so higher highs on price. The price is going up and up and up and up. Okay, and we're taking it from candle closes. Okay, so let me just flip back and just explain this really, because this is quite important. That you take RSI from the candle closes, okay? So you have to look at this candle close to this candle close to this candle close. It's not from the wicks, okay? In 2018, I actually went through a period myself where I was trading from the wicks, and I found it actually was really, really good. I knew that it was from the candle bodies, and I always had people commenting on, by the way, saying it's from the candle bodies, and I know it's from the candle bodies, but it actually was yeah, worked pretty well. But yeah, I just want to explain to you the right way, so you are looking basically, just to clear this up, you always take it from the candle closes, by the way. Officially, this calculation works off the candle closes, okay? Although you can see well, I gave examples in 2018 from wicks, but officially, from the book and everything, then this calculation is from the candle closes, just so you're all aware of that. Okay, I just thought I would mention that. So yeah, but bearish divergence is the flip, okay, where you're going to see higher highs in price, okay, but the oscillator is making lower highs, okay. So again, this is a reversal, so you only want to see this, or only want to trade off of it, actually. So seeing it and trading is two different things. So when we only want to trade off of bearish divergences if we're coming into a high time frame resistance, okay, and then on top of that we see the bearish divergences. It's just adding into our thoughts that price will reverse here, okay. So we've gone from an extended uptrend, that trend starts getting weaker, weaker. Okay, volume is another way that you can look at divergences, really. Okay, say you make a high, and then on the next high you've got less buy volume. Well, that's another type of divergence, by the way. That's just a bearish divergence on volume. But here I'm going to say that we're getting a higher high on price and the RSI is going down. Okay, that's your bearish divergence. Okay, and when one sees bearish divergences on a chart after an extended uptrend and coming into an important resistance level, it is a sign the buying is drying up and there may be a reversal in the current trend. Okay, so for the example of this one, again, this must have been earlier yesterday. So this was yesterday. We saw some bearish divergences, and this dropped down in the end. Well, a little bit of a drop, obviously, to 382 fib. But what you're seeing here is a new high made on price. Okay, so a new high made on price, and obviously a lower high here. So price has made a higher close. So from this close to this close, it's higher, and the RSI here in the example has gone lower. Okay, so that's a higher low on price, but a lower high on the oscillator. Okay, and that's obviously your bearish divergences, and you want to see it after an extended uptrend coming into a resistance and then heading to the downside. Okay, cool. So moving on, I will take the questions. I'll take those few questions that have come in at the end. By the way, I just want to go through the first steps here, the next 4 slides, and then I'll do the questions, and I'll move on to the ends here. So yeah, hidden bullish divergences, and this is one where I see people just lost in general of how to look at hidden bullish or bearish divergences. One second. Okay, so hidden bullish divergences, this is a continuation trend. Okay, so this is, so for the same example, if you see hidden bullish divergences and you're seeing an extended downtrend and you see hidden bullish divergence, that this is not something you would trade off of, because you want to see hidden bullish divergences in an uptrend. Okay, so it's basically when you long the dip. Okay, that would be your opportunity to long the dip. As you see the retracement in an uptrend, that is a continuation. So this is not a reversal. Okay, so obviously I tried to make it clear that the standard divergences are reversals in trend, whereas the hidden divergences are continuations in the trend that's already existed. So hidden bullish divergences by the dip in the uptrend, and hidden bearish divergences is essentially sell that rally that's happening in a downtrend. Okay, so I hope that makes sense. But hidden bullish divergences, okay, is where the price makes a higher low. Okay, so you're coming down, you make a higher low in the price from left to right, you've made a higher low, but your oscillator, okay, has made a lower low. Okay, so what this signifies is, though, when one sees hidden bullish divergences in an established uptrend going into a strong support, it provides a good opportunity to buy the dip. Okay, so I'll show you now the picture reference to make this hopefully understandable. Okay, so we are seeing here the price makes a higher low. Okay, so this is a higher low on price, and the oscillator that we're looking at here making a lower low. Okay, so higher low in price, lower low on the oscillator, and this is an established uptrend. Let's say on this was actually Binance, and this I had to go back a little bit to find an established uptrend with a good example, but this was on Binance back in, doesn't say the date here, but I had to go back through the chart to find it. But it was back when Binance was in its established uptrend, obviously breaking all-time highs, and this was just a form. It's not the best example I've got for you here, but I think it makes the point that you want to see an established uptrend, a coin that's looking bullish. You see the higher low here on the price, and you see the lower low on the oscillator, and that gives you your hidden bullish divergences, and that's signifying to you it's a good place to look for a buy in an uptrend. Okay, so essentially buying that dip in an uptrend. Okay, so that's hidden bullish divergences. It's for continuation in an established uptrend. That's the only time you ever want to trade them. And just so I make this clear, you would look for the confluence. For an example, here is not a great one, but you would take like fibs from low to high, for instance, coming down to a 618 support level, coming down to maybe obviously taking from our closes, looking for, let's say, like a daily support or an hourly support. You know, we're looking for a confluence of factors to say, okay, we're seeing hidden bullish divergences coming down to a support level in an uptrend. This is signifying a good time to buy. Okay, and lastly, the hidden bearish divergences. Okay, so the hidden bearish divergences again are going to be for continuation of downtrend, Oh my god. Let me just, I'm really sorry. Continuation of downtrend. Sorry, my spelling right there. So what we're looking at here is obviously you only want to see this as price rises in an established downtrend. That's the only time period you want to be trading them, okay? And this is where the price makes a lower high. So obviously, let's say that rally to the 382 Fibonacci, you're seeing that rally come up, okay? You're seeing price make a lower high, but the oscillator is making a higher high, okay? So that is hidden bearish divergences. You want to see it in an established downtrend. When you get that rally up, that's where you'd look to sell. Again, you want to see confluence. So let's say you're in a downtrend, you rally up to a now daily resistance, so an old support flipping to resistance, and then you hit that and you see hidden bearish divergences. Well, that's a good opportunity to short a rally in a downtrend, okay? So when one sees hidden bearish divergences in an established downtrend going into a strong resistance, it provides a good opportunity to short the rally, okay? And for the picture example for you all here, this was a really, really nice one. More recently on Binance Coin, where this trend is now like flipped to the downside, and this was just this is a really, really nice example, if I'm honest, because this was one where you see price obviously here, okay, so from our peak here, and again you are looking at the closers here, but from the peak here to the closers here to the closers here, what you are seeing is lower high, okay, and a lower high, and look at the RSI here, it's making a higher high and a higher high. So you see lower highs, but the RSI making higher highs, higher highs. Look at this one for an example. You're coming up into support, okay, let's just mark this out really clearly for you all. This support, okay, support, flipping into resistance, okay, so you have an SR flip. On top of that, you have an old monthly level as well, so that's a really, really strong sign saying short this rally. This is what's known as a suckers rally, you know, for another phrase, where you're seeing this rally in a downtrend, a real big downtrend that happened on BNB in the end, coming up. You know, you're rallying, getting a little bit of a rally. You can imagine people FOMOing into this. You know, you're seeing 1, 2, 3, 4, 5 hours of green in a row after a downtrend. People are probably losing their hats thinking, here we go, it's off to the races again. Let's everybody buy. You know, you're getting all the FOMO piling in here, but what they don't realize is that you're at an SR level, you're at a monthly resistance, and you're getting that hidden bearish divergences. And to top it all off, you didn't get it all in the picture here, but you get another move down and yet another rally where then you have a trend line, don't you? Third touch of the trend line, again a lower high, but an even higher high again on RSI here. So that's your third touch of even bigger hidden bearish divergences, where without a doubt you're still looking to absolutely short this rally. In an established downtrend, why would you not be shorting the rallies, okay? So yeah, that's hidden bearish divergences. I hope that made that clear. So I will take those few questions before I move on. Is RSI the best oscillator to use, and do you use 2080 or 3070? I mean, it's hard for me to say the best oscillator to use. They're all for me much of a much. Like, I wouldn't really say there's a best or a worst oscillator to use. It's kind of personal preference. Obviously, on these charts, I've got the MACD here and the RSI. I personally like to I like to use both of these when I'm referring to divergences. As you see here, I've got a quick flip that will go straight to MACD and RSI, so I like to check them both. They won't always say the same thing, so sometimes you'll see divergences on one and not the other. But yeah, RSI is generally respected, and I like to use the levels of 80-20. So that's extreme. 80 is extreme. Obviously overbought, and 20 is extreme oversold, but I don't really want to give a lesson on RSI today, if I'm honest. But yeah, that's basically yeah, RSI and 2080 is what I use, or that's where I have my alerts. Wow, I have learnt it's wick to wick. We'll take this on board. Yeah, it's you know, it's weird because sometimes the wicks, you know, do work, to be honest. But yeah, nevertheless, the official way, this is only taken from the close. You know, the calculations, okay, it's even going to have it in here. You know, it's taken from the close. So you can obviously adjust this, but by default, it's going to be on the close. Okay, and this is obviously my, so this is my custom-made indicator, by the way. So this is not one that will just be default on TradingView. This is my custom one, where obviously you can get stochastics in there as well. But stochastics are just another form of RSI essentially. But yeah, it's taken from the close, as you can see there as well. But yeah, moving on to the next question. For example, hidden bullish divergences. Does the RSI have to be an oversold area for extra confirmation? I guess that would be another. That would be nice if you do get the hidden bullish divergences and you're oversold. Then that would be nice. It's not a requirement, but yeah, if you're coming from heavily oversold and you start getting those divergences in those oversold areas, then that would just be extra nice, I guess. So yeah, that would just be then an extra factor of confluence again. So doesn't have to be, but yeah, that would be generally nice, I suppose. I think if BTC hits 9.1 resistance area, it might hit. I think if Bitcoin hits 9.1k resistance area, it might hit nice hidden bearish divergences on 4-hour time frame. Do you agree? It must hit above 84 level. I don't know, man. If it hits 9.1k, I guess I literally, that's an impossible question for me to answer, really, because I have no idea how big the momentum will be going into this move. It's impossible to predict whether we will have hidden bullish or bearish divergences, because I literally have no idea what the momentum will be like. So I literally can't answer that question. I'm sorry, because I have no idea what the momentum will be like going into that. I guess we can predict that possibly there might be hidden bearish, but without seeing the actual thing, that it's pointless. Like, RSI is not a prediction tool, it's like a lagging indicator, so you can just see what's happened in the past. There's no way of this being a leading indicator. You are only reading past data. You cannot predict anything with the RSI. So the RSI is not a prediction tool, it's just acting off past data. That's one of the reasons I don't like it, by the way. So this is just showing you things that you can look at. If you can read price action, then you can know that there's bearish or divergences without even looking at it. So yeah, this is all past data, so you cannot use it for a prediction, because it's just a lagging indicator. You cannot use this to forecast. To forecast, you use like Elliott waves, Fibonacci, but not RSI or any indicator. You're just not going to work, because you never know how strong that move's going to be up or not. Okay, so I hope that makes sense. So yeah, moving on. So divergence classes. Okay, so this is where you'll get A, B, and C class divergences, and you only really want to be trading off of A. Okay, so you do have 3 classes of divergences, but being not a fan anyway of divergences in general, I would only look really class at the A, because you start going down to B, and I don't even know anyone that would trade well, some people must, but if you're trading class C divergences, I would say, well, why? Because that's really weak. Okay, so we'll explain what they are just so you're aware. Okay, so class A is the standard divergences as I've shown today. So for example, when your price is making a higher high and the lower high, for example, on the oscillator is giving you obviously your higher high, lower high, that would be your bearish divergences. Okay, so that's just like what I've explained today. These are all examples of class A divergence. Okay, so that's really the one you only want to be trading off of. But class B is where price makes a double top and the oscillator makes a lower high, and I have got examples of this in a screen shot in a second. And class C is where price makes a new high but the oscillator stays at the same level as the previous high. Okay, so this is an example of Bitcoin, and this is I thought was a nice one because I know so many people lost money during 2019 in an uptrend by trying to short every high. Not people in the group, but I saw people doing this, and it was absolutely crazy. So this is the example of the classes. So here we see obviously a double top on the price. Okay, so double top on the closes, remember, so from this close to this close we see the exact same close in price. Okay, so double top on price. Okay, candle closes. RSI is a lower high, so this is your class B bearish divergence. Okay, so the exact same closes but a lower high on price. This is known as a class B bearish divergence. Okay, then here from this high to this high, you obviously are making a new high. So from this high to this high, you make a new high. Okay, and then your oscillator makes a lower high. So this is obviously class A bearish divergence. That's the strongest divergence you can get. Okay, and the price does see downwards moves, but even here you did see a downwards move. So but people trading this well on the short, I'm not going to get into it, but here we can just see that we did see a class A bearish divergence. So here the same high, lower highs, class B. Here a higher high, lower high, class A bearish divergence. Okay, and class C, okay, is where here you see price making a a new high, but RSI stays at the same high. Okay, so that would be class C bearish divergence, because you've made a new high, but the oscillator has stayed at the exact same high. So that's class C. I myself would not, don't even refer to this, to be honest. But that's just so you're aware that some people are going to view this as a trade. So yeah, that's class C bearish divergences of a new high, but the same high on the RSI. Okay, and I will take a few questions now, a second. So seems like you have regular bullish divergences and hidden bearish divergences at the same time. Seems like you can have regular bullish divergence and hidden bearish divergence. Which one takes precedence? Well, it depends if you're looking for a continuation of a trend. If you're after a continuation of a trend, you want to be looking for hidden bullish divergences. So if you're already in an uptrend and then you drop down and you get hidden bullish divergence, well, I guess that your time frame is also going to depend. So let's say you're in a daily uptrend, okay, you get a pullback in a daily uptrend. That's where you'll see hidden bullish divergences. But maybe if you're then on the 1 hour chart, because on the 1 hour, that daily uptrend, that pullback in a daily uptrend is going to give hidden bullish divergences on the daily time frame potentially. But then on like a hourly chart time frame, where that you'd look like on an hourly chart in a daily pullback, you'd be in an hourly downtrend, and maybe you form a falling wedge of that hourly downtrend, and then as you're coming down in your falling wedge on the hourly, you get regular bullish divergences. So the time frame is going to be, it's a good question, by the way, but you would see, for instance, like your standard bullish divergences in a falling wedge, okay, but when you zoom out to the daily and you just see the pullback, and you start to see your hidden bullish divergences. So you can see both at the same time, and I guess it's going to be the time frame dependent if you're in an overall uptrend, but absolutely you could see lower term time frame bullish divergences, but on a larger term time frame hidden bullish divergences. And I guess it's just coming together to give you more confidence to buy essentially the dip in an uptrend. I hope that makes sense. If it doesn't, ask again, but I hope that has explained that. Mike, hey Daniel, do you still use MACD and RSI for your scalping strategy? I can imagine on lower time frames it's less laggy than on daily. So yeah, when you're scalping, obviously the indicator I use has got the moving averages, okay, and you can definitely add in the RSI and the MACD. They are helpful for those really low time frame moves, but you have to think as well that, so for instance here, if you're scalping and you see like these divergences, you can see that there are pullbacks from them. There are pullbacks from the divergences. It's just the way the majority are going to use this is they're going to see this bearish divergence and they're going to expect new lows. That's the way, in my opinion, not just me saying it, but people have come to me and like had this problem, and it's because they'll see this bearish divergence and they will expect a reversal of trends. And it's just like, you can use it for like scalping. Yeah, it's pretty nice because you see this and you do get pullbacks on each of the examples. You've seen pullbacks, but yeah, so yeah, when I'm scalping, you can definitely have the RSI and be aware of it, okay? Be aware of the MACD and look for divergences, but I would never just base a trade off of it. My entries are not based off of the RSI, but if I see bearish divergences and I'm shorting on the scalps, then, it's just another extra confluence. So on that way, I like it, okay? I do like it, but it's not something I would base the trade off of, okay? I require a first confirmation, and then the divergence is just an added extra that I like to see. How do you read price action to see divergences? So kind of like in the example, let's go over to Bitcoin. We probably have got divergences here, by the way. So yeah, we do. So here is like, you can tell without looking at the divergences that there would have been divergences here, because what's this? It's obviously a higher high in price. What's the RSI doing here? Well, it's clearly made a lower high. But does it surprise you that this move here has got less momentum than this massive move? I would know this without even loading up the RSI, that there's obviously going to be bearish divergences there, because this move is really big and powerful. This move is just not as powerful. It's like, look at the difference in percentage price. This is a strong move. This is not a strong move. So obviously that the momentum behind this move is going to be smaller than this. Like, it's just like you can tell before even loading up the indicator that there's going to be bearish divergences there. I hope that makes sense. Just, it's kind of obvious. Well, for me, it's kind of obvious because it's obvious that you're not, well, I want to not use that word because I know that some people don't find it like this, and you're obviously learning, so that's understandable. But for me, I can just kind of tell that there would be bearish divergences here, because this move is not going to be as powerful as this move here, is it? If that makes sense. Okay. Yeah, so that's the way that I would like review it. Are RSI divergences only valid in the 70-80% zones? Okay, so are your divergences only valid here? Trying to think of some examples where I could try and show you. So really, I mean, I would argue that you want to see it and say yes, because if you're looking to short, okay, you only want to short when the price is moving up. Okay, so if you only want to short when the price is heavily moving up, and you only want to long when the price is heavily moving down, well, naturally you would be wanting it to be in these extreme overboughts, okay? Because if something's extremely overbought, then you would naturally expect something to pull back, or that's the only time then you want to be shorting. You only want to short when something is going up in price. You never want to short when something's going down. Likewise, you never want to long really when something's just going up. You only want to long on the pullbacks. So yeah, I guess there's no official rule that I can give you. There's not an official rule that I've ever read, but yeah, I would say naturally you want to only see these divergences in these oversold areas, because if you start to see divergences at the midpoint, say 50, what is 50 is a neutral area, so there's no bullish or bearish vibe to the 50 line. But yeah, to give you a nice answer, I would say yes, you want to see in the oversold, okay, bearish divergences and the oversold bullish divergences and the overbought bearish divergences, okay, just so then you're sticking to a rule where you're only shorting when price moves up and you're only longing when price moves down. Too many times I see people wrecked, and this is people in the group as well, that I understand because we've got newer traders here, but people love to FOMO into moves still, where there was this extreme move to the upside, FOMO buying here, and then there was a little bit of a pullback, and people are losing money. It's just like, yeah, you only want to be sort of buying on downwards moves, okay? So if you're just market buying as this is shooting up at the top here, it's just so crazy, really, really crazy thing to do. Like, I would really not advise that. And if you need to, if you see something pumping and you feel FOMO, you really need to control yourself. You really do need to control yourself. And I know it's really hard to do as a newer trader to get that sort of control, but if you do it enough times, eventually you're going to get really heavily burnt, and then hopefully you will learn your lesson. Because generally you only want to be buying on those pullbacks and shorting on those moves up. And if you keep FOMOing in and FOMOing into moves, then you will get eventually burnt. Okay. So yeah, that's just something I wanted to note off there. So yeah, this was another example, a second of throughout the 2019 rise, where there's so many people trying to short all the uptrend. It's like, I'm a big believer of just trading with the trend. Okay, so let's load up Bitcoin a second, because it's easier. I know that there's a lot of visual learners here, and I'm a visual learner, so when you have gone to an uptrend, so what, as I've said many times, what was the signs that this was bullish? Okay, obviously for me, the main sign that this was very bullish, not necessarily before, okay, but what is bullish market structure? Okay, so I've gone through a lesson on this, so you all know bullish market structure is higher highs and higher lows, isn't it? That's bullish market structure. Do you want to short a bullish trend? I myself am not interested. I'd prefer to, well, that's the wrong thing to say. On a day trading, I will trade long and short, but on the macro or for my swing trades, I'm only looking for swing trade longs. Why would I look to swing trade short something when we're in an uptrend? It doesn't make sense. Yes, day trading this down is fine, but swing trading it is the wrong move. You should be looking for swing trade longs, okay? Where was the decisive time that we went into an uptrend, okay? It wasn't at 4K here. It wasn't. Okay, your decisive uptrend, well, at this point we were obviously in a clear downtrend. Okay, this downtrend only switched when we took this high, and then what did we do? Okay, this was the time we went high, low, or this is a lower high, lower, and then a higher low, so e.g. a little bit of an apex coming in here, but really this is the sign. As soon as you take this high, what have you done here? You've went low, high, higher low. Breaking here was the time to go bullish. Okay, so arguably it was absolutely fine to be bearish here, but as soon as you break up here, as soon as you come to 5k, the mid 5ks, you have to have a bullish vibe, because you have changed market structure to bullish. Okay, and that's just referring to this tweet here, or not tweet, actually just a post, there were so many people just stuck wanting to short every single rise, and it blew my absolute mind. It really did, because we had changed market structure bullish. This is one of my main trading strategies. It's so simple, but many people also find that hard, that when you've changed to a bullish market structure, why are you trying to short every single high? And many people were saying because it's bearish divergences. Okay, it's like, this is how many people get wrecked, in my opinion, because if you're trading with the trend, it doesn't matter. If you've got bearish divergences here, yeah, you can sculpt them on the short-term time frames, but you're not looking for trend sort of reversals when you've just started an uptrend anyway. But yeah, throughout 2019 rise of BTC, so many traders were stuck with their bearish sort of biases and wanting to short every rise. Bearish divergences caught so many newer traders out, making them miss or short the rises several times, just continuously trying to short that because of some bearish divergences that you had going on the chart. Where the trend is, even on here, the lower term time frames, it's still higher highs and higher lows, isn't it? So even on the 60-minute here, you can see bullish market structure clearly. So are you looking to short these bearish divergences? I mean, for scalps, yes, but for any sort of swing trade, absolutely not. Okay. Moving on to the last slide that I have here, and this is one for Imi, which is about so where did he posted his thing to remind me, and where was it? Please don't forget to go over price action, volume, and momentum. So this was a little bit of an example of, from momentum, you incorporating a little bit of price action. Obviously, this kind of requires its own stream, and I'm sure you appreciate that. But this is like a nice example of price action, which is bullish. So Link, as you all know, okay, I'm sure you all have been aware of this. Link has been absolutely insane. Obviously, a bit of a pullback right now, but in the grand scheme of things, absolutely insane. Absolutely, Christ, it just over 100% move. Very, 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 very bullish. Okay, so the price action, the market structure is bullish. Okay, so coin is in a major uptrend with strong momentum. Okay, but then you start to see here the RSI bearish divergences. So you see here higher highs, and you see the RSI making lower high, lower high, lower high, lower high. So this is, if anybody's tried to short Link here, because you can short Link on Binance, if anyone tried to short Link because of some bearish divergences, they did get wrecked again. This was up like another 10%. So, yeah, I wanted to note that the market structure, okay, so your price action is bullish. You see bearish divergences, people are going to short, but the momentum, okay, so this is where the differences are. And I actually went through this with a member yesterday, where we were literally looking at this bit of price action together as it was inside of this triangle, and I said I believe this is going up. Okay, I noted the bearish divergences, but I was also saying to him that this is clearly the momentum is up. So this is where the RSI is different than MACD. So you can see on the MACD, although you were getting bearish divergences on the RSI, the momentum of the move on the MACD was increasing. Okay, so you see from this peak to this peak, it was a higher peak on the MACD. So that shows you that the momentum was still strong in an uptrend, and obviously the triangle pattern is generally a continuation pattern as well. Okay, and just so you're aware here, I will map this out. You might look like it's a fake out, but you do not take the low of the triangle there. So obviously your stops are resting below here. So trading this triangle in the end was profitable, by the way. But yeah, just wanted to note that this is a little bit of a clue with the MACD. Looking at the MACD and the momentum, you could see that you're in an uptrend. You could easily get caught out by bearish divergences if you're looking at that, but when you look at the momentum of the actual move, you can see the momentum is clearly increasing, okay, making new highs. You're looking at a continuation pattern, you're looking at an overall uptrend. So this is the price action side of things, the higher highs and higher lows, the price action in terms of a symmetrical triangle, which is bullish. And the momentum coming from the MACD showing you that the momentum's increasing. MACD here is going to help, and obviously the RSI with its bearish divergences could have possibly made you lose money. Yeah, cool. Let me just read through these few questions here. So makes perfect sense. Do divergences work on all time frames? Yeah, they do. So you can use this across any time frame, really. You definitely can. Makes perfect sense. Thanks. No worries at all. If you are trading on the 4 hour, do you look for divergences on the 1 hour, 4 hour, or 1 hour? So I hope I've made it clear that I'm never specifically looking for any divergences myself in my trading. But if you're trading off of the 4 hour, then So this is just in general. When you are trading from, if you're a 4-hour time frame trader, you zoom down to the 1 hour to get your entries and exits. Okay, so specifically looking for your exact entry to the tick and your targets and your stop losses, you zoom into the 1 hour. So naturally, if you're a 4-hour time frame trader, when you zoom into the 1 hour and get your entries and exits, you would be looking at the divergences on the 1 hour as well, because that's kind of where you're determining your entries and exits off of the 1 hour chart, even if you're a 4-hour trader. So yeah, to answer your question, mate, yeah, you would look for divergences on the 1 hour if you trade 4-hour timeframes. Looks like we broke out the rising wedge on that 5-minute chart. I'll get to Bitcoin in a minute. In this example, after the big pump, like you explained, falling RSI, what would you do now when not in the trade, but waiting for better picture, e.g. with fibs, watching volume? I'll take that one as well in a minute. Gotta go, guys. Wife and baby need attention. No worries, man. In a bullish market, long the dips. In a bear market, short the tips. Do this until invalidation. Absolutely. Like, people lose... It's crazy, but people lose money in uptrends. You know, trade an uptrend should be where you make your most amount of money as a trader. That literally should be where you make the most amount of money, but people still lose money in uptrends. And yeah, but basically that is a really good tip there by Adrian. What about MACD ticking down, about to cross negative before link broke out a triangle? Well, this is also not something that would be surprising, because you are moving down on the price. So I am a trader that 100% focuses on price, never ever really has a grand focus on any indicator. But you can, this is obvious as well, that this is obviously going to be downtick. Well, I wanted to stop using this word, but it's kind of, you see price going down, you don't need to refer to the indicators period to kind of see what's on the chart anyway. Like, this is standardly is going to be moving down because the price is moving down. So you don't need the indicator to tell you that. So if you saw this, you should think to yourself, before loading up this indicator, you would know that it's going to be down ticking. So this shouldn't put you off of your long of trading this triangle, because it's going to be moving down because price is moving down. So this should not off put you essentially off of a long, because you're in an uptrend, you're making higher highs, higher lows, then you form a continuation pattern. You should be looking for longs. And just because this is down ticking would not put, or it would not put me anyway off of a long position, because I would say to myself, this is going to be moving down without looking at it, because price is moving down here, okay, or the closes are moving downwards, okay, so you would know without looking. So that shouldn't put you off of a long position, okay. When we are going to get Elliott Waves tutorial, well, I want to do Fibonacci first, and then move on to Elliott Waves. But Elliott Waves are like really not a requirement of trading, although I'm going to go through Elliott Waves on my account at the end. But yeah, I want to do Fib. For me, Fibs are much more important, so we'll get to Elliott Waves, but I want to do Fibonacci. So let me go over those two other questions. Where was those questions that I said I'll get back to? So it looks like we broke out a rising wedge on that BTC chart. So let me take a look at BTC a second. I want to end by looking at BTC anyway, to be honest. But so we so you're referring to, like, I guess you're taking it from the closes, something along like this. Yeah. Yeah, I might want to. Let me just really quickly see something. Oh, didn't even click. Oh wow, it literally ended at a 1-to-1. Okay, so it's possible that this is some sort of ending. Just like really quickly, this really is possible that this actually comes into like a 1-2. Okay, so yeah, you possibly have made a high here. You have possibly made a high, so that's pretty nice. And obviously, you know, as noted, we got some bearish divergences on this little rising wedge here. So there's a potential of a high being in here. And for the next question of, in this last example after the big pump, and you explained rising RSI, what would you do now when not in a trade? Waiting for bigger picture, e.g. with fibs, watching volume. So if I was not in a short position already, so if I was in no position right now, how would I trade it? To answer that question, I will move on to my overall analysis of Bitcoin, and that will hopefully help you decipher what to do next. So I will end here with a Bitcoin analysis and maybe look at some alts. So yeah, Bitcoin. So really crazy. Let's start with the move up that got us here, which is obviously, well, I've got this as So this is what I've been looking at overall, this like Elliott wave count. So understandable why people want to know about it, but here we can see that overall, people have asked me today, are we still expecting lower prices? Are we still, or am I personally anyway, still expecting price to come down to this 7,500 sort of region? And this price action for me right now would point to yes. Okay, especially if we put in a high here. But as it stands for me, this is just an ABC correction, and this is not something that I've just added today after the move up. Obviously, I've posted this count for you all as price was still in the channel here. So the Elliott wave count for me was pointing to a move up. Okay, so with that in mind, the Elliott wave count prior, I had envisioned a move up here. Now we've got to move up here. I'm not changing my bias to bullish. Okay, in terms of midterm, this can easily be obviously a 1, 2, 3, and then an A, B, C, and the 4 to come down for the 5th here. So are new prices still possible? Absolutely, yes, new prices are still possible. Really, if you start coming above, well, there's a few invalidation levels. Obviously, we've got a monthly at 9,250, and we got this little bit of an order block coming in here. Okay, that sits at 9.8. You clear 9,250, 10k, then absolutely very unlikely that we're coming down to make new lows again. Because I would say we get back above here, and it's good. It's probably that this was a substantial bottom. Obviously, it was a monthly level, so it's not like it's a random pivot that we have pivoted off of here. It was a substantial monthly level. But yeah, if we start breaking above 10k, I'd say, well, there was a bottom at the monthly level. So there we go. But until that happens, until we kind of break these resistances, one has to say this is a free wave move right here. Okay, so that looks to me like a free wave move. Obviously, if this is a C, I'm very aware that this has to be a 5-wave move. You have to see, obviously, if you're looking at a flat of 3, 3, 5. But I could just relabel this to a WXY. So at the moment, though, it just looks like a 3, a 3, and a 3, which is WXY, not an ABC flat. On the lower term timeframes, obviously I had this a 1, 2, 3, 4, and a 5 though, but then it's arguably that this is not a 1 now when you see the rest of the move. But I'm not going to go over that in too much detail here, but the degree and all this. But essentially, yeah, we can definitely see new price is down low here, and this is just all part of the correction. I envisioned from an Elliott wave perspective, price coming up here anyway. This is just standard flat formation. Okay, so you're seeing your fibs from the bottom of A here to the top of A. You see like about a 90% retracement on the B. Okay, and then your maximum you're going to be looking for here is the 0414, which is, so I'd say that the top out should be 8,872, like max price 8,872. For, let's just say, 8,900 for then I'd say this is invalidated, and likely this was a 1, 2, 3, 4, and a 5, and you were going up higher, or maybe even 1, 2. Maybe we do end up forming a 4 here and up for a 5th. Okay, so that's a possibility. 1, 2, 3, 4, and a 5. Okay, but you don't want to see price coming above 8,900, otherwise that does invalidate the count. So yeah, I just wanted to explain that. So yeah, I guess you could say 8,900 is an invalidation level. And if you are not in a position right now, how would I look? So look, yeah, that's another good question. So if I was not in a position right now, how would I look to trade this? So let's just delete everything. So firstly, I would have a fib from this low here where it started to get impulsive up to here. And I would be very aware of the standard 382. So 382 coming in, also nice psychologically that it's about 8,500. So 8,500 is a support level. Okay, without a doubt, 8,500 is a support. So it's really difficult. I myself am more interested in the short here when we look at the confluences of where this has come up to. Okay, so we can take a fib extension here, price come up obviously to the 1-to-1 extension very nicely. We were also hitting some daily 200 exponential moving average. You can just see how well this caught it, by the way. So it's literally catching it really well. So we're seeing like a confluence of resistance here. It's not just a random reason that we're pivoting or have seen a pullback. We're seeing a confluence of reasons to see this pullback at this level. Not to say price can't get through it, but in that respect, I personally am looking to short this. And if you are not in a position, I still think, even if I was in zero position right now, the risk is really not that grand if you're expecting prices to short here. So I mean, if I was not, just to make it clear, if I wasn't in a position, I probably would be in a short anyway, because, well, I am in a short, but you know, if I wasn't, then I guess for your confirmation, if you wanted a little bit of a confirmation of a breakdown, well, look at this volume. Right now, one could argue that this is a flag and we continue up. So you want to see like a pull down on increasing bear volume. Okay, so you want to see a drop and you want to see that bear volume like really increase. And when you see a first pullback with high bear volume, well, then all you're going to do is look to short the next rally to trade that down. So that could be your step of confirmation on a short if you don't feel comfortable shorting here. And many people don't feel comfortable shorting here because I'm not even going to lie. This is an aggressive short. Absolutely, I could wake up tomorrow and get stopped out. So, you know, tomorrow we might be at 9K. Who knows? Like, literally nobody knows. So, you know, this is an aggressive short. And your much safer short really would be wait for a heavy volume drop and then short the next rally to, you know, try and trade it down like this. Okay, that would be like a safer short once you see a heavy pullback, once you see a heavy drop. And if that heavy drop doesn't come, then I'd be very cautiously in my short, basically. I'd feel very, very, you know, even now, like a little bit, you know, this could easily continue up. It literally could easily continue up. So, yeah, I'm in the short, but I'm a little bit on edge because I can see this, you know, this could continue up at this point. What are your last thoughts of BTC for the overnight? I hope I've just explained that. You know, we've seen a confluence of reasons of why we're rejecting at this price level, but until we really break support or see some heavy bear volume, then one would generally expect a continuation of this move. So it's like a little bit of a hard area. I mean, the risk is obviously, you know, if you're opening a long here, the risk to reward is not very great. That's the only thing. Like, opening a long here, in my opinion, is still not really a great trade, because, well, you have to use this low as your stop loss. So yeah, I mean, there's a long there, but the risk to reward is not too great, in my opinion. But yeah, this was obviously one that today the group kind of caught the long. So this was pretty nice in terms of day trading. And this is why I wanted to explain to people that this long that we, you know, some people as well in the group caught with me, that was a day trading long. Okay, so it was a day trader's long here. Like, you wouldn't have had these pivots to know at the start of the day that we would kind of come down to the 618. So obviously in the end, we come down to this 618 around 8,100, and you know, we ended up obviously in the end shooting up another $500. But yeah, don't beat yourself up. You know, some people were maybe like angry at themselves because they have a day job or they have a family where they can't spend all day at the screen, and I totally understand that. I absolutely understand that the very vast majority here are not full-time traders, and you have like a day job. You have to go to your day job. You can't be looking at the charts all day. And if you miss this 618 entry because you're working or you got your family, then don't beat yourself up about it. There's nothing you could have done, because this was literally a day trader's long, in my opinion, because it was literally from low to high, coming back down to that 618 level. And you know, this is an entry, kind of, you know, a very good entry, but you would have only seen this if you were in the group sort of in the middle of the day, kind of like day trading this. So it's like, I just want to say, like, do not beat yourself up if you miss this rise, because I imagine 90% of people missed it, because you would have had to have been, well, either if you've done your own TA then doing this, or seen me like mention it that we're at the 618 here, and if you missed it, then just don't beat yourself up. You know, you got to wait for a pullback though, in my opinion. But yeah, this rise obviously did all start from this 618, where we were coming up in this channel, lost the channel, hit the 618 to the dollar, by the way, and the reaction from this, absolutely crazy. You know, that's a massive reaction, all coming from that 618 day trading. But yeah, that means you can use the bearish divergences on maybe lower time frames as a sculpt single and a higher upturn time frame. Yeah, so Nelson, like I would look at divergences like for an extra confluence on like a 3-minute chart. So I could be trading on the 3 minute chart and be checking for divergences at times. So yeah, you can use divergences across any time frame. They should work on every single time frame, even to the 1 minute. But yeah, you can use divergences on any time frame, like definitely. It's just obviously they're more reliable. People are going to say they're more reliable. If you see a divergence on a 1 minute time frame, if you see bearish divergences on 1 minute or bearish divergences on 1 week, what do you think is more powerful? Okay, it's 100% the 1 week. Okay, so the higher the time frame, the more reliable it is. So you're going to see divergences all the time on 1 minute charts. Okay, so you don't want to trade from them because you're going to see them all the time. But a weekly divergence is obviously a lot stronger than a 1 minute chart, for an example. Yeah, I'll wait for a short invalidation before entering along at this point. Yeah, I know some people that caught this are just trading stops, and that's like not a bad idea. So if you also got this long, then literally, well, I have already taken 70% of the long in profits, and I've got 30% trading stops. So if you're also in that position with me, then obviously I've got two accounts, so I'm in a bigger short than I am long. So I'd make more money overall if we drop here, but for the hedge, I've still got my long open. And you would literally just trail your stops at this point. Okay, trail your stops in, clearly in profits, but there's no need to close out of your long at this point, like 100% of it. Just keep a percentage. I've got 30% running. You don't need to have 30% specifically, but there's no need to close your long at this point because it's still making higher highs, and even this is a higher low from here, so it's still essentially going up right now. So I wouldn't close out the long totally. Okay, but overall I'm in a much bigger short than I am long. Okay. Where would you be looking to close your short on a scalp/day trade? Well, for me, there's a few different targets you're going to have naturally. Like the most easiest one is going to be a 3-2. Like literally the most easiest one would be 3-2, which is here sat at 8-4-7-3 on this pool, and that does line up with some area of confluence on terms of this sort of old resistance. Okay, so you are seeing this as a pretty pivotal level. Obviously, you got these closes. Okay, let's just zoom into the 4 hour a second. So these closes about 8-4-20. So 8-4-20 looks to be a pivotal level. Okay, 8-4-20. Basically, the 3-8 to the 0.5. This is a pretty important level. You can just see here it's been pretty important. Okay, so this is a pretty, definitely a take profit on a short. It's not to say we can't just drop down, but you would look to take profits here because there's fib levels combining with this like SR level. But with the speed of this rise, it definitely can drop down just as quick. Don't get me wrong. But yeah, this naturally would be a look for a level. Are you getting a reactions from here and bouncing, or are you just literally going through it? So yeah, this would be 100% a region you should be aware of if you're in a short. Or if you want to get on a pullback and longer pullback, look for the reactions at these levels. Do you start to bounce or do you not? Isn't the increase in bull volume on the last move up on the 1 hour a bit of a tell that we might see another leg up? It's quite a bit increase on the 1 hour VAR. Let me see. So yeah, this the volume is definitely high. Like it's undeniable that the volume is high. So this would be indicative of a third wave. When you look at the volume, so generally you see this volume on the third wave. So when you look at it like this would be indicative of a third, for the fourth, for the fifth. So this would be indicative of another wave up. When you look at that volume, yeah, definitely, you would think this is a third wave for that reason. So yeah, I'm not saying that we cannot see a move up here, and I wouldn't be surprised if I get stopped out, to be honest, because although we're seeing a confluence of reasons for it to stop, especially specifically why those higher highs and higher lows hold, then one has to envision a move up, and obviously that volume as well is very nice. How do you determine what days will be good for alt trading? Would 1 day BTC consolidation be enough, or do you look for longer? I personally view the alts for their setups on their own. So obviously we can see pullbacks here, but like these pullbacks should still be viewed as opportunities. So look at this, like you see the breakup on ETH, and even ETH has pulled back to this weekly. So I'm sure XRP has pulled back as well. So XRP has pulled back to this weekly. We see, how's this Bitcoin? Okay, so Litecoin did see a move up during this stream. So from this entry, it's now gone into a little bit of probably a symmetrical-esque view. where we're seeing a series of higher lows and maybe something like this. So maybe keep your eye on how this breaks. But yeah, like I to answer your question, how do I determine when will be good for trading alts? I literally will trade the alts for their own setups. So yeah, if you start to see Bitcoin consolidating here, we wake up in 12 hours time, like I'm going to sleep after this, but if I wake up in 12 hours time and Bitcoin's still ranging here, I would still trade altcoins, because you have to remember, at the end of the day, a stop loss is there to protect you. Okay, so the stop loss is there. So if I'm trading an alt and Bitcoin suddenly pumps tomorrow, then I'm going to get stopped out of my alt. Like, that's the worst that can happen, is I get stopped out of my alt. And, I wouldn't care less, because especially if it's because of a Bitcoin pump, because I get stopped out of my alt, but then my USD value is going to be increasing significantly. So, yeah, I view alts for their own setups. Obviously, it's a little bit possibly say crazy to, if you're in the middle of a pump like this, yeah, you're not going to be looking to long altcoins. Shorting altcoins is good, by the way, but longing altcoins on this move up is crazy, yes. But as you reach this consolidation period, especially if it extends into like 12 hours later, then yeah, trading altcoins again, absolutely fine. And some of these alts have provided good opportunities to re-enter along on the pullback that you've got from here. Just for a random example there, on ETH, like that pullback onto that weekly is an opportunity at the very least for a scalp. As you can see, that first pullback onto it, 1.4% bounce, 1.7% bounce. So these pullbacks, as Bitcoin rises, one could view as opportunities to trade back into these positions. A little bit of in and out, scalping, but nevertheless. How do you are you shorting alts to hedge? So I did enter on the short term as we were entering this consolidation. Some altcoin shorts, just because when Bitcoin moves up. So if you get this move up, okay, if we get the move up on Bitcoin here, the alts are probably going to take another leg down. So if you come over to like EOS, for example, then this is like a pretty nice one to short, because we had got rejected from this weekly. Okay, so if you've got rejected from a weekly, that's obviously a strong resistance. And as you all know, this was like my target. So we come up, hit the weekly, and then you get rejected. So if you're coming off of a heavy resistance like that, then naturally this alt is going to be a good short, because if Bitcoin moves up again, well, this is probably going to move down again. So yeah, I view, you have to be picky with your altcoins, obviously, but like EOS is in my opinion, I'm already in it, so I'm not saying short it now, but I'm safely in this position now, because, well, let me come over to BitMEX, because that's where I trade it. But obviously EOS here hit it's weekly, and then in the end, a little bit different than Binance, but we did hit weekly and have just hedged, coming down here. So, after the Bitcoin rise, this is a good place to look for, essentially to hedge yourself in case of another rise. Entering like a altcoin short is a good tactic. You have to think about which one you're shorting. You don't want to just short a random altcoin, but if you know that you've hit a critical resistance level and Bitcoin is at a critical point where if it dumps, your alt's probably going to dump, and if Bitcoin pumps, your alt's going to probably dump, it's like a pretty good hedge. Okay, the odds are in pretty good. So don't just blindly randomly trade any of the alt shorts. And obviously if Bitcoin consolidates, that's the other thing, that if Bitcoin does consolidate, or this can start to recover again. So it's more of a short-term trade that I do the alts for shorting after a drop or a rise, specifically more. What about double time frame divergences to use it as a signal? Do you mean for double time frame divergences? Do you mean right like where I was saying on the daily you'd see hidden bullish, and then on the lower term time frame on the downtrend bullish? Is that what you refer to? Absolutely, yeah. You could use that as a signal, like 100%. You could use that. I would not refer to it first thing, but if you want to use it as confluence, then yeah, it's absolutely fine to use. So that's the main thing that I wanted to stress about divergences. Just never use it as your primary entry and exits. Okay, so never am I trading from divergences alone, and never is it the first thing I look at. Okay, it would be the last thing I look at. Okay, or one of the last things I look at. It's never ever going to be my go-to look at, and I think many people use it for that. So yeah. Does anybody else have any other questions? If not, I am going to call it a night. Yeah, I will call it a night if nobody else has any other questions. So yeah, just be aware, this is obviously at the moment still highly risky short, and while we are still maintaining this bullish market structure, okay, you are arguably in a worse position to be in a short because it is holding, high, higher, low, higher, high, potential higher low. So you just want to see a little bit of a breakdown, okay, where that would give me a little bit more confidence, okay. But then yeah, what's your Fibonacci levels for possible retracements? Yeah. Can you go over ETH BTC? Yeah, I'll do that and then I'll end. So ETH BTC. So this is like one that I've obviously talked about. That we are at a critical level of resistance. So it's really obvious that this is a really big resistance level. Resistance, 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 resistance. Finally got through it. So if this is anything to be a sign, then this is obviously only bullish in my opinion. Firstly, we're in an upward sloping channel. Secondly, you start consolidating under resistance. Thirdly, you get a move up and you've back tested the weekly. You could wait for daily close. Okay, so daily close is going to be in, I can't even see with this thing here, 4 hours, 4 minutes. So you could just wait for daily close. You're not going to miss anything by waiting for that. But obviously, if we close above this weekly on the daily, that's pretty good. We obviously have a daily level here. So let's just not forget about this a second. Maybe we could say we want to see our daily close above 222271, and that would be well, arguably bullish. Okay, I myself would trade this long. It's not something I would short. If you're closing above the level, obviously have a stop loss. I'm not saying long it with no stop loss, but myself, I would trade this long because you're closing over a resistance level. That's the way I view it anyway. Obviously, if you want to trade the channel, then you could have shorted the top of this channel and tried to trade it back to the midpoint, to the bottom. There's different ways to trade it, but yeah, myself, I would view it as bullish if we close above that weekly. Cool. So yeah, I'm going to call it a night then. Thank you, everybody. Thank you. Keep solid. No worries at all. I am glad you enjoyed. So yeah, thank you, everybody. Obviously, yeah, updates as always throughout the day in the chat. Congratulations to the people that caught that long, because obviously it's very nice indeed. Yeah, now there's no need, in my opinion, there's no need to jump into a trade right now. Give it 12 hours. Wait till the morning, where you can take a trade then. Okay, once you've seen a little bit of a resolution of what's going on here, you don't need to jump into a trade straight away. No trade is arguably a good trade right now. You've not seen a heavy pullback to long, and you've not seen any confirmation of a breakdown to short. So arguably right now, no position is the best position to be in, to be honest. So yeah, that's just a little bit of a word of wisdom, I would say, that you don't always have to be in a position, and arguably there is no position to take right now because this is undecisive. You've got the bullish market structure, but you're coming up to heavy targets. So give it 12 hours, literally, is kind of what I would say. Wait 12 hours, see how this is when we wake up. Yeah, cool. What about if so last question, did you address my question from earlier about levels? Apology if you did. Stepped out to make the lunch for the kids. Wait for a short where was your question about levels? I've gone back through the chat. I went back through the chat and I can only see one comment from you about this, and where you said wait for a short. I'll wait for a short invalidation before entering along. Yeah, I guess you want to try and get in on a pullback really, but yeah, I agree with your comment. Wouldn't, if BTC closes above 8375, wouldn't you see it as bullish? Well, overall, I would say, well, if we reject here and we start to move down, no, because my primary count here actually has us moving down, and this, I just will load this up, that this isn't something that I just have pulled out of nowhere. Obviously my count, even when we were sat at 7k, was looking for that move up to these regions as the ABC flat, and specifically I had it listed the first time. This is obviously all posted in the group as well, but it's just I can't go back through all those posts and find it. But even while we're down here, I was envisaging this move up for the C wave if we were standardly looking at it as an ABC. So now we've got up here, for me it doesn't make sense to flip bullish right yet until I see an invalidation of this ABC flat. I see no reason to flip bullish, because all it's done is hit sort of target to now come down. So yeah, I don't necessarily view this as bullish right yet. Obviously if I get invalidated on the flat, then yeah, I would say yes, but not at the moment. Okay, cool. So cool. Yeah, if I've done any other questions that I've missed, then obviously just come across to the group and say, hey Daniel, this is my question, and I'll obviously answer it. So I'll catch you in the group, everyone, or just well, if you're a contender, I'll catch you on next week's stream. So yeah, I guess until next week or until the chat. I hope that you thoroughly enjoyed this one. I hope that it has served you very well. This Litecoin trade obviously was in that triangle right now. You could just wait to see how that triangle breaks. And I hope I've given you an insight on how I view divergences, what divergences are. Obviously, tonight has not been a lesson on RSI. But, you know, if you want a lesson on RSI and these other tools, obviously I can do that. But, yeah, tonight was specifically about divergences. Why I don't give a high priority to divergences myself, because I prefer to trade price action. How you can avoid getting chopped up by trading divergences by just sticking with the trends. If you're in an overall uptrend, why, unless you're scalp trading, are you trying to short every move up? It doesn't make sense. Yeah, and basically my viewpoint on them. So I hope this has been helpful. I will catch you in the next stream, and enjoy yourself, and hope that you make some brilliant trades. Thank you, everybody, and yeah, cheers. Good night. Bye.